Okay, let's dive in. We're looking closely today at one specific source. It's a PDF called Importance of Flexibility.
Exactly. And the title really says it all. We're talking about why flexibility is just so crucial, especially if you're trading.
Right. That's our mission here, to unpack why adaptability isn't just, a nice skill to have, but actually fundamental for success in the markets. And this text, it really digs into it, starting with something I think we can all relate to.
Yeah, it kicks off with that common frustration, doesn't it? Like needing help at work, maybe from colleagues, and they can't or won't step outside their usual routine to lend a hand.
That kind of inflexibility, it can be really disruptive.
Super frustrating.
Yeah.
And the text draws a direct line from that feeling to the trading world.
Ah, okay. So how does that same inflexibility show up for traders?
Well, it explains how it creates real problems, real difficulties. It paints a picture, contrasting, say, a beginner trader with someone more experienced.
Okay, what's the difference according to the source?
So the beginner, they often find one strategy, right? Maybe they copied it, maybe slightly modified it, and then they get laser focused on perfecting that one thing. They stick to it rigidly. Their whole world becomes, is this strategy making money?
Okay, very narrow focus. And the expert.
The expert, according to this text, is adaptable, flexible. They're willing to make changes when things aren't working. They experiment.
They try new techniques, new methods.
Exactly. And there's a really critical reason why this matters so much, which the source emphasizes.
Which is?
Markets change. Simple as that.
Yep.
They change continuously. They aren't static playgrounds.
Right, that's the constant challenge. So a strategy that worked great last week or even yesterday
Might be completely useless today.
Yeah.
Because the underlying conditions, the market dynamics, they've shifted.
And this is where the beginner gets tripped up.
Precisely.
Yeah.
The text says the beginner resists changing because the rules worked before. They're anchored to that past success.
It worked then, it should work now, that kind of thinking.
Yeah. Meanwhile, the expert, maybe the person who even came up with the original strategy, they've likely already seen the shift and tweaked their own approach. They've adapted.
So the beginner holds tight, doesn't adapt, and the result is?
Their trades start going sour. They start seeing more and more losses. That once profitable strategy begins to bleed their account.
Ouch. The text mentions a specific ability being crucial here, the most important one even.
It does. It talks about the ability to change your cognitive bias. Basically not getting stuck with fixed prejudices about where the market should go.
So being mentally flexible, not just strategy flexible.
Exactly. And the text links this directly to profitability.
Yeah.
Constantly analyzing what the market is actually doing now.
And being willing to genuinely change your mind, your perspective, your approach based on that reality.
That's what leads to success over time. It's that ongoing analysis and adaptation.
And the danger of not doing that, of staying fixed.
Well, the source is pretty clear. If you decide the market has to go up, for example, and you only focus on that direction, you put your account at serious risk when the market inevitably turns against that view, which it often does.
The text uses an analogy from nature, right?
It does, a powerful one. Think about animals or plants. Flexibility allows some species to survive changing environments.
While the ones that can adapt.
They get eliminated, they disappear from the natural cycle.
And applying that to trading.
It's the same idea. That flexibility lets some traders navigate the shifts, survive the downturns, protect their capital, and ultimately succeed.
While the inflexible ones.
They tend to blow up their accounts, they lose their capital, and they're out of the game.
There's also this interesting concept mentioned, short-term memory in trading. What's that about?
Yeah, it sounds a bit odd maybe, but what the text means is treating each trade as its own separate event.
So looking at the current market setup with completely fresh eyes.
Exactly, as if you're analyzing it for the first time right now without baggage from the last trade.
I see the benefit. It helps reduce that mental bias, right? That feeling carried over from the last win or loss.
Precisely. It cuts down on that directional preference you might have built up. Makes it easier to adapt to what's happening now in the space between the last decision and this one.
Does it give practical examples of this flexibility?
It does. It says, look, it's perfectly okay to change part of your strategy if the market starts acting differently or your trades aren't working.
No shame in adjusting.
None at all. And it goes further. It says it's also okay and definitely not shameful to realize your entire strategy just isn't cutting it anymore.
And then what?
And then start over. Design something completely new that actually fits the current market conditions you're seeing.
But there's a nuance there too, isn't there? About not just throwing away old strategies completely.
Right, good point. Don't just delete the file, so to speak.
Hmm.
That old strategy, even if it failed now,
Might become useful again later?
yeah, maybe with some tweaks. Or maybe it's suitable for a different kind of market environment you encounter down the road. Keep it in the toolbox.
But the underlying message, the thread through the whole thing, is you have to be flexible when the market changes.
It's non-negotiable, according to this source. It's the core requirement.
And it really ends by turning the question back on us, on you listening. Based on all this, how flexible are you, really?
Are you stuck? Do you find it hard to change your methods? Can you actually keep up when the market shifts gears? It's
Yeah.
a tough self-assessment.
So if we boil it all down from this deep dive, flexibility is key. Like in nature, it's about survival and success in trading.
Sticking rigidly to old ways when the environment, the market is constantly changing, that just leads to losses.
Whereas being willing and able to adapt, changing your view, adjusting your approach based on what's actually happening.
That's what helps you stay in the game, protect your capital, and find ways to be profitable, even when things are choppy or shifting.
So here's something to chew on, building on what the source says. If continuous market change is the only constant, what does it truly mean to be prepared as a trader?
Right. Is it about having a fixed plan? Or is it about having the capacity to continuously adapt to the unforeseen? Something to think about.